following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Don't make assumptions. Let your life be transformed. When you stop making assumptions, your word becomes impeccable, and your life is completely transformed. Magic just happens in your life. What you need comes to you easily because the Spirit moves easily through you. Market-wise, let's take a look at it out here. We have the Dow Industrials up 17, NASDAQ down 1.5, S&P's off 1, gold contract down $6.40, trading at $13.2630, silver down 7 cents, $17.81 an ounce. Platinum off 10, $9.79 an ounce. That with those metals, folks, what that's all about. Good old King Dollars catching a bid. Oil's up $1, $49.35 a barrel. You get the note market, 10-year note down 6 ticks, 126.14. 30-year bond off 12, 154.28. Both of them are pulling back with light volume. That's saying that they still want higher price, lower yield. King Dollar 629 ticks, trading 92.485. That's caught a bid. The euro is at 118 to the U.S. dollar. The yen is at 110.64 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're laying at the highs. SPY out here, you're at 249.89, 98 rather. The high yesterday was 250.09. We hit 250.12 today. You're at 32 million shares. We did 56 million yesterday. It's going to be pretty wild that if we even actually get a contraction of volume today, and it looks like we're going to. So the real question is going to be, where does this baby close out? And if we take a look at the futures, we've had a sideways move out here all day long today, folks. We take a look at these S&P futures right now. Futures are trading 24.93. We had a low of 89. We had a high of 95. So you've only had 6-point differential. Now, when you take a look at these futures, when we came down at 11:30 this morning, that has some volume down there. So it does have a shot of going back to this 24.90 area. In fact, the 24.92 has a volume too. So in both cases, the next hour, you can get into those. You know, there's been no large movement out here. There's no two ways about that. Inside the Dow Industrials, what do we have? Dow Industrials also laying at the highs up here. So the high in the Dow Industrials is 22,179. We've hit 22,147 thus far. Bottom line, it's going to make a difference whether it can close over the highs of yesterday, which was the 22,134, because we did go up into and closed above the low of the high on the 8th of August. So it's subtle out here today, but it's going to be important what it can do. NDX 100, no, the NASDAQ Composite, also laying right at the highs up here. The high that we're talking about in the composite is 64.60. We hit 64.56 today. Bottom line, you know, we'll see where that baby shakes out. The small caps, the IWM. What do we do in the IWM? IWM out here, up 40 cents, 15 million shares. This is a contraction. This is coming right up to ICE, actually, 140, 182. Yeah, 141.82 is like ice right in there. 141.55. We're 141.94. And you do have volume contracting there too. We'll see what happens coming into the close, because you're coming into 24 million, and right now we have 15 million. Notes and bonds. Let's go take a look at that note and bond market. Well, actually, let's go look at gold first. So gold out here, folks, trading at a price point of $1326.40. You're down $6.30. This baby looks to me like it's going to make its way down to this 1305 area. You're pulling. I like how it's pulling back. It's pulling back with light volume. It's doing what, I would expect that it would do after a run like we've had. Gold in July 10th, folks, was $1,211. It runs all the way to $1362. It broke out when it went above, when it took off $1297 to $1317. Had the volume, pulling back with lighter volume. Bottom line, it can pull back right into where it broke out from, was actually the 1297 area. So it's going to be cool kind of watching how this whole thing shakes out. Bonds. Same setup in bonds. When I mean the same setup is this. The differential is that you're pulling back, and you're pulling back with dramatically lighter volume. Bonds took off from a price point of 124.14, gets up to past the June high, 127.28. This thing can get back into 126.10 pretty easy. We're at 126.15. You have the contraction going on. We'll see what kind of rejection of price we get. So 126.06 in the 10-year. If we take a look at the 30-year, where that retracement would be, the 30 is down to 205,000 contracts, which is still light volume. And the 30-year, you get really somewhere around 154.23. You're at 154.29. So it's what's interesting here. It's pretty close to where this would be backing down to. Where I expect it to, not that it will. Let's go take a look at the King Dollar out here. King Dollar's caught a bid. Okay, so you have 624 ticks. You're at 92,480, and 92,390 got it back in the range. What that means, folks, is that now the next leg is 94.04. So that should be a pretty good bounce. That's a decent bounce, and we'll see what happens up at that level. Thus far. King Dollar hadn't been able to get any bid since March. Since the January 3rd, it's been a straight move down. So it makes total sense that it catches a bid. The real question is going to be, how far does that bid go? Now, when I look at the bond market, the gold market, and the dollar, it looks to me that next 2 or 3 days, all of those are going to reverse once again, meaning the dollar will probably get up there another penny and a half. Bonds will come down, basically another half a point, the 30-year, 10-year, maybe about 20 ticks. And then the gold market probably get another $10 or $20 on the way down. Well, yeah, $20 on the way down. And then you'll see that reverse coming up here. So it's going to get interesting coming into next week. 877-927-6648. We have the Dow right now up 21. NASDAQ is off 2.5. S&Ps are down 1. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at the strength versus the weakness inside the markets out here. We start with the Dow Industrials. Strength right now, you get Chevron up 1.5%. You get Dow DuPont up 1.2. Disney's up 1. GE's up 1. Taken away from it, Caterpillar's down 1%. You get Apple off 1. Cisco is down 1. And Pfizer is down 1. If we go over to the Apple, so bottom line, Apple's holding price. You know, it's going to get interesting here. What you do have is that you've got 2 days with volume. You know, we did the 71 million yesterday, did 37 today. 37 is broken. Your little swing point out here from last Friday. That's 159.89. So we're at 159 flat out right now, and you have volume in it. So if that's where we lay out, your next leg down would get you right into 154.63. Now, where the danger is going to come with Apple when you get down into that level is that will it fill that gap? Apple's got a monster gap, folks. When it gapped up on earnings there, went from 148.41. It opened the next day at 159. You know, bottom line, the closer you get to that, the more that the higher probability that you're going to break it this time. What is intriguing, if you're dealing with gaps and working with gaps and you haven't seen them too often, is that this is a classic too. The first time that you come down into a gap, folks, most of the time the top of the gap does hold, and in this particular case, it's held 3 times thus far. Not that that's a lot, but that's still 3 times. It held it 3 times. Now you come down there, you start coming down there with volume, build some cars, you'll see it blow right through that area, big time. Let's go take a look at the copper market for one of the tigers out here. So copper has had quite a pullback. Well, it's been on quite a run too. HGZ7. So inside this copper market, what we've had is that you made the high out here. It was a straight line move up to 317 that started out at 251. You're down 5 1/4 pennies right now. And you get some good volume here. Yeah, this has got, you know, a normal retracement on this anyway will get you down to like 292. Right now you're 298. Let me just say, yeah, that's, I mean, you get an expansion of volume as we keep going down here. So bottom line is that that's where I expect you're going to see it. Let's go take a look at, Equifax, that's down another $14. Look at this thing, man. Oh, this is intense. Like, what's the news on this? This is going to be some kind of, let's see. So dozens of senators seek investigation of Equifax stock sales. Oh, yeah, the stock sales are a big deal. There's no doubt. More than one-third of the U.S. senators want the Security and Exchange Commission and the Department of Justice to get to the bottom of whether Equifax managers violated inside trading laws when they sold stock days after the company found out it was hacked. You know what's going to be really wild here, folks? This is going to be really wild. So picture that, you know, we went through the Depression, meaning 2008, okay? The markets get wrecked. You know, banks paid a lot of money, fines. They're still going to be paying a lot more, but no one got in the can, right? You know what's going to happen here? This is going to be wild. So because of the fact that we've all been complaining that, listen, man, nothing has happened, right? Look at this. One-third of the senators, guess what? These guys are going to get hung out to dry. These guys are going to end up being the poster guys because they were pretty stupid, man. There's no doubt about it. I don't even like using that word, but that was about as bizarre as you can get, thinking that they can actually get away with it. So this might be the new thing. Yeah, and no doubt fines the government for revenue, Tom. There is no two ways about that. It's a normal occurrence for all those politicians. Line them up, get them up, take them in. Yeah, because when you lock them up, you don't get any revenue. That's a liability versus an asset, right? No doubt about that. Let's go take a look at the some of the Dow stocks out here. So, check this out. This is pretty intense, folks. So Austria, here, I'm going to bring this up for a second. So if we look at these rates, okay, so we talk bonds a lot, of course, because it's hard to comprehend that we've stayed at low rates for so long. My take is we're going to be there for a lot longer. But watch this, folks. This is amazing. So if you put up a 30-year bond, right now, a 30-year Treasury, you know, if you buy it off Treasury Direct, and if you don't know about Treasury Direct, if you want to buy Treasury bonds, it's a great way of doing it. You can go right to the Treasury Department, you sign up for Treasury Direct, guess what? You buy the bond at the exact same price as the largest bond person out there on the auctions. That's what ends up happening. Great way of doing it. No fees, you know, no middlemen, no nothing. Anyway, 30-year bond, right? 2.7%. Now, if we go over to the Netherlands, 30 years is 1.26. Switzerland is actually 0.3%. I don't have Austria here, but the reason I'm bringing up Austria is this, is that Austria, folks, sold a bond either yesterday or this morning, and they sold it $4.5 billion, a 100-year bond that yields 2.1%. Yeah. 2.1%. How's that? That's pretty intense. That's the thing that's amazing to me about that is that there is that much demand on a 100-year basis that someone will only take 2.1% to make sure that they get their money back. Now, I suspect that's going to be that better be someone that they're just trying to line up their balance sheet to make it delta neutral, meaning whether it's an insurance company or someone else that's saying, in the future, if I make, let's say you put an insurance policy on someone that's, I don't know, 20 years old, 30 years old, you know, in the future, guess what, 2% compounded, that wouldn't be bad, you know, well, it's not even compounded, but 2% would probably get them where they want to get in some of those policies going out into the future. But that is about as intense as you can get. What it shows is that we're in a world of super, super low interest rates. It doesn't look like it's going to stop. We go over to Ma Bell. Ma Bell right now is up 21 cents. Now, this baby's come down pretty good. Last 6 months, it's come down from 42.65. You're at 36.46. And they opened the spigot up for a nice price war once again on the whole Apple scene, folks. Starting Friday, Ma Bell is going to buy one iPhone and get one free. That's not going to be their new iPhone 10. What it is going to be, though, is their iPhone 8 and the iPhone 8 Plus. Sprint, thus far, yesterday the Sprint said that they were giving they were going to do a half-off lease for the iPhone 8 and 8 Plus, and that deal required a trade-in, though, of the iPhone 7. What I expect you're going to see out here, though, is that you're going to see Sprint match them. Let's go to Mike in Loveland, Texas. Hey, Mike, what's going on?
Hey, Tom.
How you doing, man?
How was the hurricane?
Oh, we missed the bullet. I mean, it was. We're still cleaning up, but we're just cleaning up, limbs, trees that, not monster trees, not in my case anyway. Do you know what I mean? So yeah, we missed the bullet. It was so cool, missing a bullet. That's for sure. And stay right there. What are we gonna be looking at coming back?
Oil Services, ETF, IEZ.
IEZ, awesome. You stay right there, folks. We're coming back with Mike from Loveland, Texas. We're going to look at the oil services equities. Dow Industrials up 18, NASDAQ down 2, S&P's flat. We're going to be right back.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 17. NASDAQ is down 2. S&P's are flat. We're talking with Mike from Loveland, Colorado, not Loveland, Texas. Shame on me. IEZ. We're going to look at the IEZ. And so this is iShares Oil and Gas Equipment. Okay, let me just see. I want to see these.
Yeah, here. I just found something I wanted to ask you about.
Okay.
Look at a 15-year weekly chart.
Yeah.
And connect the bottoms of all the bottoms going back to 2004. And it's a beautiful straight line. And we just bounced off it a few weeks or months ago. and it looks like a good sign on a weekly chart from 2004.
Yeah, so I could go 10 years weekly, but I can do this monthly. Going back, I don't know. I just went back. Let me see what I just.
That'll work.
Yeah, so 15 years, right? Yeah. So take a look at this.
So I think we're in really good shape. On a long-term 15-year timeline or whatever, we just bounced off a trend line that goes back to 2004, and I think we might be off to the races if, maybe. You never know, that's for sure.
Yeah, no, we're all in that same bag, that's for sure. What's intriguing here, like when I look at this, so this is not like the XLE. This is Schlumberger is the largest weighting, Halliburton the second. So between them, they have 25% of the whole ball of wax here, which, so that's...
Oh, I see. Okay, so highly concentrated.
Yeah, and that's how they are, too, because the XLE, that's all about Exxon and Chevron. The XLE is 22% Exxon, 17% Chevron, and then 7% Schlumberger.
So if Halliburton and Schlumberger are looking good, then this ETF will do well too, because it's so concentrated.
No, that would make sense. Yes, that would make sense. And now if we bring Halliburton up, it's coming right into the downdraft with 7 million versus 22 million shares. So let's get some volume there, though. That might be a small ABC up to 38, 41, $3. Gets you to 42. Yeah, I see 42. Interesting. See, can you see this little ABC? That's what Halliburton just finished up, was 42. I'm ballparking it, but it just went to 42.24. SLB, I think SLB is Schlumberger. So you're at 67.01. Same setup. I wouldn't get too excited just yet, man. Well, actually,
I'll keep cool.
Let's do this one first. Okay, so this one's a small ABC up to 62.56. So 66. Okay, it's 375, which gets you 68.25. Yeah, and it's a 67. Yeah, see, Schlumberger can get to like that $69. It looks like. But they're dying a little today, man. So.
Okay. Thanks for checking it out.
Okay, brother. Have a great one, man. Have a safe one. And when you take a look at that, folks, what you like to do, because let's picture that those equities they already moved. That ETF already moved. What you do is you just wait for that retracement, and you see when the retracement comes back. If it comes back with lighter volume, like in this case with the IEZ. It comes back to 31.35, has lighter volume, then you get some action. That would be saying that, okay, you got up there, you finished a small ABC up, you pull back, it has lighter volume, then you get, your risk versus your reward is pretty decent there because you can put your stop right underneath that high volume, and you're going for the top of the range. That's how that's shaken out. Let's go take a look at Amazon out here. So Amazon... That's up $13.80, and it's got some juice, man. Pretty amazing. So Amazon looks like it's on its way to 1,001 once again. Let's go to Google and see what we got with Google. Google's only up 91 cents. Facebook's laying at its highs. The high of Facebook, 175.49, hasn't been tested yet. That does have volume up at that high. Microsoft, actually, let's go to NVIDIA. NVIDIA, yep. NVIDIA wants to reach that high, 174.56. We're at 170.52. It's going to be interesting watching this. So NVIDIA, folks, and a lot of these chips have been at the same price as going back to June 9th. And now we're pushing... Yeah, you're pushing 90 days. Bottom line is that we'll see whether they can break out of those areas. We take a look at the silver market. Let's go over to silver. We take a look at silver. Okay, so silver is down 9 cents. 79,000 contracts. That's big contract volume with silver. Yeah, silver wants to come back down to this 1732 area. 1750 first. But I can picture silver. You talk about volatility, man. Silver has it all. One of the gold stocks out here today got a good bid in it. That's Eldorado. Eldorado's up 33 cents. This came off the low of $1.77 a couple months ago. And what that's all about is that they have this mine in Greece, folks, that could be very lucrative. It is very lucrative. But bottom line is that they've been having political troubles out there. So what happened was announced this morning is that Eldorado surged 16%. As after the Athens news agency reported that their environmental ministry issued 2 licenses, and Canada's trade minister said will intervene on Eldorado's behalf in Greece. The Athens news agency reported that the Greek environment and energy minister issued 2 licenses needed for Eldorado's gold mining investments in Olympiad. So bottom line is that this is an equity that politically, you know, inside the mining business, man, there's a lot of risk. One of the biggest risk, you know, of course, is political, that you can find the gold and you can't get it out of the ground. And then you have the aspect, well, that would be that you just can't get the license. The other one is that, yeah, you actually do find the gold. It's too expensive to get out of the ground, and the rock is too hard to basically release it. And then, you know, one of the risks that have been out there for a long period of time, and, you know, if we look at Nova Gold, you know, Nova Gold's 418, and this equity here is still an exploration stock. What they have going for them is that, you know, they have zero revenue. And this is where the longevity comes in, because they do have resources that are huge, but the key is going to be, how do you get to those resources? They are way, way, way up in Alaska. And I remember when Greg Johnson was the vice president, and who was the president? I remember interviewing both of them, because on the big run in gold in 2006, they had already bought the equipment to basically start getting supplies for that mine, and they actually had shipped it. You know, so you can either say, you know, there's going to be more equipment that you need now. That equipment, I'm sure, is still there and hasn't been done much with. But higher price in gold, yeah, those mines will open up. They'll figure a way to get it out. You stay right there, folks. We'll come right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment, with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrial's up 22. You get the NASDAQ up 2. S&Ps are flat. And this is pretty cool, folks. So, you know, we get the new iPhone out. iPhone's $1,000, $999. And so what this article's about is that iPhone prices jump, but stats say there is still no inflation. This is by a Bloomberg columnist, Macro Man. This is pretty cool how he explains this baby out. So this week brings the issue of pricing in the mobile communication industry into focus. Tuesday saw the launch of Apple's new suite of products, including the iPhone X that will cost $1,000, yet recently collapsing prices in the cellular phone services, including further 0.8% decline. On Wednesday's PPI report have helped push key inflation rates low enough that both the market and the Federal Reserve wonder how much more tightening the FOMC can get away with. This is, I mean, we all talk about this every day, so it's pretty wild. So check this out. Well, commoditized products like DVD players have fallen sharply in price over the years. The bill for sexier goods like top-line smartphones or automobiles continue to rise. Yet it's indisputable that you get more for your money. So check this out. This is wild. The engine in today's Toyota Highlander XLE generates about 40 more horsepower than in the Ferrari 308 GTB 40 years ago. That's pretty wild. Accounting for this quality improvement is known as hedonic adjustment. Now that's and is one of the primary factors lowering the effective price of many of our goods. Many people feel frustrated at official data that shows declining prices even as their outliers rise because they don't account for the improved quality. However, it is reasonable to question whether the economists can accurately place a dollar value on the quality improvements, and there is a schematic bias to adjusting prices down too far. By taking the number of U.S. households and comparing it with the personal spending data, we can estimate that average annual spend per household on things like cell phone service and phone hardware. Comparing these figures with the underlying PC price data shows just how much the hedonic adjustments matter. This methodology suggests that U.S. households currently spend about $144 a year on telephone hardware. That's up substantially over the last couple of decades, even as the price index for phones has fallen 92%. We can observe a similar phenomena in wireless services. Annually outlays are currently estimated at nearly $1,000 per household, yet the official data suggests prices have collapsed. Better networks, more data explain the discrepancy. Yet the fact is that households do spend more than their wage packets on mobile telephone than historically has been the case, and that ultimately is what consumers are sensitive to. Moreover, something looks wrong with the adjustments that have driven the latest bout of wireless service deflation. When the new Verizon model first showed up in the data, prices collapsed, and so did the normal outlays, yet spending bounced straight back, and even as the prices kept falling. The upshot is that in real terms, consumer spending in wireless services has risen 12% since January, the largest 6-month increase in 15 years. Maybe that is correct, or maybe the price data is wrong and will eventually be revised higher. If and when that happens, the current deflation scare will look like a storm in a teacup, and traders will wonder how could they price in so little for the Fed. There's a lot to be said about that, folks. So the way that they shake this price data out, okay, it's not just inside that article, it's in general, is that, okay, so you have the price of something. Then what they do is they say, okay, here's the good. Has the good got that much better in quality? And if it has, and the price hasn't got that much, then it's actually gone down in price. And you can see that, you know, that's bizarre because, well, I don't know if it's bizarre, but it's bizarre in the context saying that things don't cost more because we all only make so much money. And as they say that deflation keeps hitting because it's going down, we know that, well, if there's deflation hitting, we should be putting less dollars out, not more dollars out. And it seems that we're putting more dollars out on a continual basis. I mean, that's just how it shakes out. But, rates, the way it's set up right now, rates still want to stay low. Let's go take a look at the GDX. So the GDX is the Market Vectors Gold Miners Trust. This is back 48 cents today, 27 million shares traded. Let's see what we got set up here. Okay, so that's a nice pullback, light volume. You're coming into 83 million, you only get 27. This is how it's supposed to be. So this GDX, that little baby can get down to like 23.86. Right now you're 24.18. And that's where we broke out from. You know, that consolidation, we were in a consolidation from April 24th going all the way over to the August 28th. It was trying to get through the October and November downdrafts. That's what that was actually trying to do. Made it through it, had some good juice through it. Now what you're going to see, we're pulling back. You're pulling back with light volume. What I do expect you're going to see is that you're going to see the aspect that the next run up, you're going to see the volume expand again. That'll be after a good old King Dollar has done its counter trend bounce. Because good old King Dollar looks like that's exactly what it wants to do. Let's go to the XLF, the financials. So XLF out here, you're up 2 cents right now. That is coming right back into 24.91 is where this thing just has a tough time getting over price. If we go to Goldman, we take a look at Goldman. Goldman laying 226, 230 is the number on Goldman. That's what you want to keep your eye on. Every time it's been up to 230, since going all the way back to March 24th, hasn't been able to handle price. Let's go to Robert in Buffalo, New York. Hey, Robert, what's going on?
Hey, good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Okay, good. I'm glad you survived.
Thank you.
You know,
yeah.
I got a little condo down there in St. Pete Beach, and I survived too.
Perfect,
I was
man.
very lucky. So.
I know. We all were, man. You know what's amazing, folks? So where we are, we're so lucky anyway. We don't get a lot of hurricanes anyway. And what it is, it's so hard to hit us. Like, you can hit the Keys easy, you can hit the East Coast easy, you can hit Louisiana easy, because then it comes in the Gulf and goes up. It's very hard to hit where we are because we're halfway up. So first it has to hit the ground, right? In this case, it hit Naples, and has to come 125 miles through, dirt, and that shears it. So we're so lucky, man. It's
so we are.
Yeah.
Hey, Tom, I was wondering if you could help me out. I don't know how to pronounce this name, but the stock symbol was SQM.
Yeah, I don't know how to pronounce it either, but that's all right. Let's take a look at it. They produce market fertilizers. Okay, potassium nitrate, sodium nitrate, potassium sulfate. So it's a potassium stock. The low is 24, the high is 55. They pay a 2% dividend. Oh, look at this. This is a rocket ship, huh?
Yeah, I was interested in the lithium aspect of this.
Let's see. Okay, so produces industrial chemicals, iodine, and lithium. Let me just see this thing and see if they break it out. Excuse me. Okay, so, well, they're breaking out lithium and derivatives as 514 million out of the $2 billion. It's not bad. Okay. Potassium. Here, just stay right there. We'll be coming right back. All right, Robert?
Okay.
877-927-6648. We're going to be coming back into the close, folks. Right now, you have the Dow Industrials up 32. NASDAQ is up 1.5. S&P's are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're talking with Robert. We're talking about SQM, and SQM, folks, is a potash producer as well as a lithium producer and iodine producer. So
it's part of the lithium index also,
yes.
the LIT.
So what I would do here, I mean, this has been, this went from 34 to 54. I wouldn't be biting,
Yeah.
You'd have to need some patience, man, like 42 to 46. This won't go just one way, I mean, it has... Well, actually, as I'm saying that, it's gone one way since $14, right? So, the highs in this go back to 2011 at $64, and the low of that high is 59.
All right.
Just wait for a retracement, man. I mean, a retracement's like...
patience.
Yeah. Because the picture when you just look at it, see, you're coming into the top of the supply line. Everyone that's had this since 2011 and 2012 are just getting their money back. And that'll be some selling. I mean, that's quite a supply line. Do you know what I mean?
Yeah, I gotcha.
You know, so if you can get it on a retracement, that'll be pretty good. And I guess what that's all about, too, is what one of the Tigers are telling me, that they're looking at in China that all future cars are going to try to be electric and they're going to need the lithium, right? Yeah.
Right, yeah.
Right. So
yeah, that's what I'm just kind of looking at, the lithium aspect.
Yeah, no, I can see it. I can see what you're saying.
Well, they have that lithium index out there that's LIT. Okay,
and that is probably, as that's going up also, that's buying this. Yeah, that's 17.38% of the lithium. And then FMC is 24%. Let me just look at FMC. Yeah, that's a rocket ship, too. Well, interesting. FMC took out its highs. Same thing, though. Just wait for retracement. I mean, FMC, they're both rocket ships, man. Cooking, brother.
Okay, Sam. Thanks a lot.
Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming back for some numbers after the close. Sherwin-Williams, green paint. They got it out, folks. It's all green. Dow's up 34. NASDAQ is up 4. S&Ps are up 1. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. We missed the bullet here in Tampa. You send some white light out for everyone south, because actually south, east, they get hit all over the place around here. Don't make assumptions. Communicate with clarity. Communicate with others as clearly as you can to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all of our relationships would change. There'd be no wars, no violence, no misunderstanding. Yeah, that Irma was quite a storm, folks. We missed the bullet here, meaning you had a lot of large limbs come down. You know, a couple of people's houses did get hurt, but nothing like southern Florida, nothing like the East Coast, nothing like actually up in Jacksonville where the water came in. One of the Tigers was just saying something that was pretty cool, actually, a gator. If everyone had an electric car, no one had been able to leave Florida. That's pretty intense. There's no doubt about that, man. That's gasoline is the lifeline down here right now, folks, in a big way. Market-wise, let's take a look at it out here. We had the Dow Industrials up 39, NASDAQ up 5, S&P's flat. Gold contract down $6.50, trading at $13.2620. Silver $817.83 an ounce. Now both Gold and silver, folks, I expect you're going to see them continue back a little bit further. Gold contract, I'm looking at about 1305. Silver, let's go take a look at silver. SIZ. Silver looks to me like it wants to get down to this lower level. Yeah, 1730. That can get to 1730, 1750 silver market. Notes and bonds, bottom line, notes and bonds, this is what you have. They had the 10-year note down 6 ticks, 126.14. 30-year bond off 13, 154.27. In both cases, they're contracting. They have lighter volume. Bottom line, that's saying that this is a retracement in a market that still wants higher price. You know, we came down with 949,000 contracts in the 10-year. And, you know, the 10-year can get down to, you know, the 126.17. Well, we're actually, it's definitely going to get there because we're 126.14. The area that we're looking at is really, yeah, even 126. See, it traded from 126 and 126.04 up to 14 down to 125 from the 24th of July over to August 16th. And yeah, even that lower swing point, 125.21. As long as the volume's still lighting the way down, it wants higher price. In fact, if you don't have the futures, if you look at the TLT, what you'll see inside the TLT took out a swing high on the 7th of September with 129.56. We did 13 million shares versus 5. You pull back. The first day of the pullback was monster volume, but guess what? You're not at a swing point. Now we're at a swing point. We broke a swing point today with 6.7 million versus the 14. That layup right there is showing that, okay, man, you're pulling back with lighter volume, dramatically lighter volume, by the way. You know, this thing can get down to, the lowest swing here is 124.80. I like how this is pulling back. You know, that's, if you like lower interest rates, folks, bottom line is that they're still coming at us. The 10-year right now is at 2.192. King dollar. What do we have with King dollar? So King dollar finally caught a bid. And the real question is going to be, where is the retracement going to be? You know, when you take a look at King dollar, what you're going to see is that 6 months, it's been going lower. It's actually more than 6 months now. It's been going lower since January 3rd. You reached a ABC structure on the way down. It did the full price projection, extended it a bit. You came off that level, and we got some good volume today. And right, even today, you can make the case that we broke this small downtrend. Let's see how this sets up. Yeah, we broke that with conviction. So 93,840 would be the next area where it should make a run to. And now what's going to be something you want to wrap your head around, particularly if you're in the metals market, as we get up to that point, you're going to want to see how we get up to that point, because that is not even a dead cat bounce. You know, a dead cat bounce, definition-wise, is a 0.382 bounce after a long downtrend. And that's what we have. So a 0.382 bounce is 94,640, which is quite a bounce. We'll see where that shakes out. But you know, you got the first day of that bounce going, and you got that bounce going pretty good. The XLF, the financials out here, what the financials did, they were up 4 cents. Not much traction underneath them. 50 million shares going against 76 million. The oil market. Let's go look at the oil market. So the EIA numbers came out today. Bottom line is that it wasn't a shocker what they did, but they did take oil up 2%. It was flat when the numbers come out at 10:30 this morning, and then they caught a bid, about 11 o'clock. You're up $1. You did 318,000 contracts out here. That's good contract volume. Yeah, so once again, you know, the oil market looks like, yeah, it just may go after that $50.64, because we had an expansion of volume. See, we had come down with 338,000, but we're up on 318 today. That's a good return, man. Meaning it came back, and it came back fast and furious. The XLE, I'd be careful about the XLE a little. The XLE That did have up 82 cents today. It had volume behind the move, but that's approaching the swing from $67. That's $67. That's a monster supply line. You came down hard May 4th with 33 million shares. Bottom line, you did 15 million today. I do expect you're going to see it hit that 67, but that's where I'd let it back off first and see if you can get some traction underneath it, because Exxon was up 27 cents, no traction in Exxon. Chevron was the mover. Oh, look at this. What's the news on Chevron? That's a big number, man. Chevron moved 169 and did have force behind that move. Let's see this. Yeah, Chevron wants to make a run to 119. Yeah, Chevron wants to make that run. Chevron is much stronger than Exxon. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 39. NASDAQ up 5.9. S&P's still flat. We're going to right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished up 39, NASDAQ up 5, S&P's flat. Let's go over to the Dow Industrials first. I believe that's laying right at its highs. Yeah, so the closing high in the Dow was today. Yep. Because when we reached the high, we reached the intraday high on August 8th. That was 22,179. You closed that day, though, at 22,085. Today we closed at 22,158. So that will be the headlines tonight, folks. Volume-wise out here, what we did, it did 823 million on the NYSE. On the NASDAQ, we did 1.9 billion. And if we go over to the NASDAQ, that's pushing with volume, too, by the way. Okay, so you're pushing into, we got to go see what we did on the 27th of July, because that's what we're pushing into. So July 27th, oh, I see. Okay, so we're pushing into 2.48 billion with 1.9, but that's still an expansion of volume. It's not bad. It's not great, but it's not bad. Some of the high volume stocks out here in this market today, let's pull that. Apple was down 121. We'll get back to Apple in a second. Bank of America was up 38 cents. You had Cisco Systems down 23. Citigroup was up 60. We had Microsoft up 53. Verizon 46. Let's go over to Apple and take a look at Apple. So Apple comes out with its phone yesterday. Look at this. They bought Apple at the close. I got it. Okay, intraday, I want to look at this. Yep, they popped into Apple at the close. Last 20 minutes, last 50 minutes, they brought it from 158.80 to 159.65. Now this gets interesting. So watch what happens here, folks. This is where, if you are into candlestick charting, this can get kind of intriguing, and this is why. You can look at this aspect of what Apple has done today and say, okay, that's a hammer. Okay, what a hammer means is that you went to the low, you closed at the high of that day. The differential is that hammers are really great signals when you have gone down for a long period of time, not in this particular case when actually we were up yesterday. So this always gets intriguing when you have a hammer that is laying out here only after a couple days. So what you want to do is that you want to take that and then put it on a weekly and see where you are on a weekly. I know the week's not over yet, but what you do have on the weekly here is that thus far you have a market an equity that wanted to try to get to its high, which is 164.94. It made 163.96. It's at 159.65. So the real kicker is that if it closed, let's say right around here on Friday, that would be a bearish signal, because what you're doing there is that you're pushing, we get an inverted hammer, just the opposite, and you're pushing into the lows, and you're pushing into those lows with volume. So that's going to be intriguing watching this shake out. SWKS, so Skyworks is one of the Apple suppliers. So if we take a look at Skyworks, that's down 7 cents today. Bottom line is that they bought that too. Let me see if they bought it into the close too. They're buying the ecosystem. Yeah, they did. Look at that. Last trade. So Skyworks did 892,000. And check it out. This is pretty wild. So the last trade, folks, was approximately 18% of the volume all day. So let me do this. I want to look at the rest of these that are in this space. So Skyworks, let's see. Let's just take a look at Cirrus Logic. I'm not sure whether Crush actually is a supplier of them, but I just want to see in the aspect in the same industry if in fact that had a bid into the close out here today. Yeah, it did. It did. So Crush did the same thing. So Crush, that had 11% of the volume in the last trade. 720,000. The last trade out here was 88,600. So bottom line that you had that's a fun buy, and no two ways about that. Let's go take a look at the banking sector. I'd start with J.P. Morgan. So J.P. Morgan, they come out saying that, yeah, their trading revenue is going to be down. And let's see exactly what Jamie Dimey said. I can't get the exact thing, but they were looking for their let me see this thing. So, yeah, sorry, folks. I know that they said the trading revenue is going to be down substantially because it was up so dramatically last year, year-to-year basis. Bottom line is that what you have out here is that we'll see whether J.P. Morgan catch a bid up to this 92. We're at 91.15 right now. Equifax continued lower, and that might have been on the aspect. So that was down $16.97, and this was a one-way trade on the way down today, no doubt about that. This was like a disaster for them. So, when you look at Equifax is $143 5 days ago. Now you're at 98, and you have senators that basically want an investigation. Oh, this is a good story. If you waited for Wall Street analysts to tell you what to do with the shares of Equifax, sorry. All 16 analysts tracked by Bloomberg have reiterated or at least not altered their advice that clients should buy or hold the credit reporting stocks company since it announced September 7th that hackers had accessed sensitive data on 143 million Americans. This is pretty wild, man. So none recommended to sell them. Evercore ISI analyst David Tugart, for example, told clients to snap up shares aggressively because the incident won't hurt long-term profits and insurance will cover some cost. Well, time will tell. Investors aren't yet embracing the optimism. The stock dropped an additional 12% today. I believe what's also going on, too, is that you have what's going to happen here. There's going to be suits everywhere, because I'm sure that just about all of us that are listening right now have whatever Equifax has on us, because whether bank loans, credit agencies, credit cards, they got it all. They got it all. And if my understanding is that if you go off some mortgages, what they actually also have is your full bank accounts too. Because what ends up happening now, do you know, like if you've got a mortgage, you have to prove exactly where all this money came from. So always make sure that trail is nice and clean, folks. If you're going for a mortgage, here, let's talk about this for a second, because this is, you hear a lot about mortgages. Some people say they're tough to get. Some people say they're not tough to get. They're actually not tough to get if, you get a decent credit rating. And it doesn't have to be extraordinary, just decent. And we'll talk about when you get back. It has to do with, folks, the paperwork within about a 8-week to 10-week aspect before you're going for that mortgage. You just stay right there. We'll be coming right back. Dow Industrials are up 39, Nasdaq's up 5, S&P's up 1.5. We're going to be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of Timing the Trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Welcome back, folks. We were talking about Equifax, and we're talking about the aspect of, we went from there to the aspect of if you have got a mortgage, what does happen is, my understanding is that Equifax also has all your bank records. Anyway, so if you're going for a mortgage, folks, it has to do with just being organized paper-wise. Not just has to do with, okay, of course, you need some decent credit, but you don't need outstanding credit. What you need is that you need your, let's say between 8 weeks and 10 weeks prior to it, you want to get the amount on your credit cards down as much as possible. Then, of course, if you're a W-2 employee, it's easier than having small businesses. That being said, though, what does happen if you have the small businesses, what you want to do if you have like pass-through companies, those LLCs, what you want to do, just make sure that you have all those taxes the last 3 years, you have them handy. Guess what? You send those in, you send the aspect of your W-2 in, every time that they want something, just send it to them ASAP, and the thing just goes. Now, what does get tricky is this. If you are let's say you have an LLC, and that LLC is that you're pushing too many expenses into it, and you're bringing that into a loss, you're not going to have a problem if you're a W-2 employee also, but what you will run into is this. So let's picture plenty of LLCs. Bottom line, you can push anything and everything you want into them, right? So let's picture you get an LLC, you make a couple $100,000, but all of a sudden you push $250,000 into that, so you have $50,000 loss, right? That might be, depreciation loss, whatever type of loss that is, it doesn't matter, $50,000 loss. Then let's picture on the other side that you actually are a W-2 employee out of that same corporation or another corporation, and you are saying you make $100,000. Well, what's going to happen is that means you only make $50,000, on the loan application. So that's important to understand, because, people get caught in that trap that they'll say, hold it, no, I make plenty of money. Well, you got to make it on paper too, folks. That's the bottom line. So that can get you in the aspect that, oh no, I got plenty of money, I got the assets, but you're not showing the income. So bottom line, keep good records. Now, check this out. This is pretty cool, man. I'm going to look this up afterwards tonight. This is pretty amazing. I remember when this came across the tape, and what it was is that MoviePass told theaters, there it goes, they could see as many films as they wanted for $10 a month, okay? So check this out. We know that I don't think there's a movie around here that's less than $10. You know, different cities are different, but I believe most of the movies here, you know, $10, $12 to see. So when this happened, you know, critics are out there saying that this is too good to be true. You know, the naysayers was saying, what are you, out of your mind? The bottom line is that wait till you hear this, and wait till you hear who started this. This is pretty wild. The movie service was undaunted with signups, cutting the price from $30. So it used to be $30. They brought it down to 10, forcing customers to wait. Check this out. People have waited a month before their passes have arrived in the mail. But listen to how many passes they sold, folks. 150,000 people signed up the first 2 days following the August 15th announcement. The site now, as of Tuesday, has 400,000 people. Why wouldn't you? You know, that's $120 a year for a movie pass when you know you're going to spend that anyway. But listen to the rest of this. This is pretty wild. So here's a quote. "My God, I was beginning to doubt MoviePass was legit, but look what I just got in the mail today," tweeted one user from Minnesota, happily displaying his all-you-can-watch card. MoviePass addressing the blunder head-on, retweeted the post. MoviePass chief executive Mitch Lowe, so check this out. He is a co-founder of Netflix, folks. Unreal. This is the way this thing is going. Admits he totally underestimated demand with a staff of just 9 people. He had 9 people. The company was nowhere near prepared, he said in an interview. It has since boosted the team to 35 to deal with the backlog. Can you imagine? I mean, this is like just a Netflix movie. That's all that's come down to. And he knows that even though I'm sitting there saying, man, I'm going to buy that. There's no doubt about it. We'll see whether I use it the whole time. But at $10, why not? The offer, which shocked some industry watchers when it was unveiled, it's opposed by AMC Entertainment, the world's largest theater operator. It comes at a time when Hollywood is grappling with collapsing DVD sales and stagnating box offices. This summer was the worst one in the decade. MoviePass customers, so check this out, who signed up in mid-August for the subscription are going to get their cards by September 10th, the service says on the website. Well, I guess they already got them. The company aims, so listen to this number, the company aims to acquire at least 2.5 million additional paying customers in the next year and retain 2.1 million of those, assuming it receives at least $10 in additional funding from its new owners, according to the regulatory filings. It was founded in 2011, sold a majority stake to Helco's and Mathiasen Analytics in August, and is shooting for initial public offering next year. With less than a month since the rollout, some bugs are still being worked out. Just 8 days into the new offer, MoviePass announced a delay of 2 to 3 weeks in delivering the cards. Bottom line is that between the Netflix co-founder and this deal, this is going to go. The CEO of 20th Century Film Fox said, "It concerns me, the idea of commoditizing film prices and the film experience. It's not hard to see why MoviePass has the industry up in arms. MoviePass charges subscribers $9.95 a month. The movie industry themselves must have basically signed an insane deal with this MoviePass. That's all I can figure, and they just never thought that they'd bring it down to $10. I can't picture why you have to accept it. Anyway, we'll find out. It's not hard to see why MoviePass offers the industry up in arms. MoviePass charges subscribers $9.95 a month, less than the price of a single movie ticket in some cities. In exchange, foots the bill for every film they attend during the period. Oh, I see. The company plans to earn more money by aggregating data on moviegoers' habits, advertising, and merchandise sold through its platform. Wow, and possibly a share of profits when subscribers splurge on in-theater popcorn and treats. Customers spend an average of 123% more on concessions when their tickets are free, Lowe said. Oh, that's interesting. So I see. So if you're MoviePass, so they have a deal that no matter what they sell it for, they have to pay the movie a certain percentage. That's what it looks like here. A certain number, probably. And then on top of that, what it looks like they have a deal with them that they are going to get a piece of, I wonder how they can get the piece of the popcorn, but that's what it looks like. The company plans to earn money by aggregating data on moviegoers' habits, advertising, and merchandise sold through its platform, and possibly a share of the profits when subscribers splurge on theater popcorn and treats. I don't know how they can follow that, but just guess what? That is a good deal. $9.95, unlimited movies, folks. Be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. XLK. Let's take a look at the XLK. So inside the XLK, this is the technology select sector, folks. And the big weighting structure in here is Apple and Microsoft. So Apple's 15%, Microsoft's 10%, Facebook is 7%, Alphabet meaning both 5 and 5. So those are all your fangs right there. Top, so that's 25, 35, 42. That's 42%. And those babies, bottom line, they're all at highs. So if we bring this back, yeah, this is at a high too. Got to a higher high out here today, no doubt. Still small juice, but you got a higher high. And what was intriguing is that a couple of tigers in the den, what they were saying is that, yeah, they might have been getting out of Apple, but bottom line is that as they're getting out of Apple, are they going into Facebook, which is trading at 173? Are they going into Google, which is at 935? Are they running into Amazon? Amazon caught the bid out here today for sure. Amazon was up $17. You're at $990. What this has, by the way, it's going to be 1,001 where the flack will start with that. You know, Amazon came off the high of 1,083, and first day came down with 10 million, or actually made a high with 10 million, and followed through at 7.7. Today it did 3.3, and the thing that's going to be amazing about Amazon now is this. Picture this. It's the 13th. Yeah, it's the 13th of September. So now we have, where are we at? We're at the holidays. 90 days is November, right? I mean, December. Yeah. So now the cookie is going to be like, okay, how much delivering we're going to get done? Where's that going to go? Let's go to UPS. We take a look at UPS. United Parcel, it's trading 117.06. We take this back. So this is making, this is pretty cool. It's just making it to its downdraft. So that's going to be the downdraft of February of last year. The high of that is 117.92. That looks like it's just going to test. Let's go to FedEx, FDX. FedEx is at 215. This looks like it's, oh no, this is a better looking chart. So FedEx evidently is doing a better job than UPS. Yeah, FedEx, definitely. FedEx, this is actually an ABC up. Whoa, this is big. So check this out. Wow. Okay, so your A point on FedEx is 119. Let's call it 120. Wow, it's an 80 A to B. That gets you 264. So this is a monthly, man, this is going to be a trip watching this shake out. This is a monthly confirmed ABC structure on the way up. The A point starts January of 2016, 119.71. Your B point is 201. That's why I just said just make it 120. So you get $80 approximately. Gets you 264. Let's hit 219 thus far. That's going to be that's going to say bottom line, that's going to be the Christmas rush. Bitcoin, let's go over to Bitcoin. Jamie Dimon was taking apart Bitcoin yesterday, and, you know, I guess it did a little bit on it, no doubt. Bitcoin yesterday was at 43.85. You're at 38.39 now. And you got a bunch of, you talk about volatility, man. You got a gap that's open at 35.55. Then you get another gap that's open at 28.77. So, you know, you're going to see, I suspect, lower prices coming at you. And evidently, I'm not sure whether the war is on between the banks and Bitcoin in general, but even though Bitcoin is still small on a capital basis, market capital basis, it's got to scare the heck out of banks. It absolutely does. Because the more you actually think about it, you know, what does happen is that when we have our money in a bank, we use the plastic, we do have the FDIC, which is the 250 grand behind it. That's one way of looking at it. But the banks want everything. So the other way of looking at it is that you have a whole money supply outside of the whole banking structure. And it's like, okay, what is a banking structure? Well, a banking structure used to be that you have the physical place to go to and you have to do something. Now what the banking structure came down to is that, you know, first you had ATMs, and, you know, ATMs started, and they took a long time to catch on, folks. People didn't think. I remember the ATMs, the company that actually owned ATMs was from Boston. They were the first ones, and they had to end up selling it because supposedly that was supposed to work immediately. And the bottom line is that it didn't. I remember looking at these machines, and I was probably only 16 or 17 at the time, saying, oh, this is interesting. You know, you go up here, get some money. The first, 5, 6, 7 years, they didn't go. And then all of a sudden, guess what? They went big. So now when you think about it, we're actually on just a digital system anyway. And that's the bottom line. The difference would be on the digital system, yeah, we're protected for 250 grand, but that's it. You know, you're not protected for more than that. So I can see how digits, are going to give them more competition. There's no doubt about it. And what does happen is this, is that, like, let me pull Western Union. I want to see, let me see if this is still public. I'm not sure whether it is. Western Union. Okay, cool, it is. Okay, so Western Union is $19.11. This company, you talk about, so this company transferring money overseas, yeah, it's still in consolidation. This has been the same place for quite a while. Wow, this has been in the same place since 08. You know, it had a high of $28. Right now it's been consolidating between $22 and $12. Let me see what they pull in. Because that business is a big business. Yeah, so they pull in $5.5 billion. But that business isn't growing. It's been the same for $5.5 billion every year. So out of that, consumer-to-consumer business is 4.3 of that. Consumer-to-business, $621 million. So consumer-to-consumer, that's how they get their fees. You know, transferring money, well, you know, Bitcoin's kind of expensive to do that. But parts of, you know, when you break the Bitcoin down, it actually isn't. We'll go take a look at Intel. So Intel out here, that's trading 36.33. That looks like it wants to reach this 36.70. The SMHs, that's what brought the NDX 100 flying up in the first place. But now what you've had is that that's coming in to test the highs that were generated out here on the 9th. So this is going to be pretty cool watching this test. 89.71. And when we're talking about tests, folks, September 30th, come visit me. I'm going to be doing a workshop at the Boston Marriott in Burlington, Mass. It's going to be a Saturday morning. We're going to start out at 7:45. You get a continental breakfast. This is sponsored by Nadex, so it's a free workshop. It's going to go from 7:45 to 1 in the afternoon. You can get all the details right on the front page of TFNN. And you are also going to receive a signed copy of my best-selling book, The Art of Timing the Trade, How Price and Volume Move Markets. Check it out on the front page of TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 39, NASDAQ up 5.5, S&P's up 1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go take a look at that gold market. So, gold pulled back last 3 days. We hit a high last week of 1362. That was a straight line move, folks, from the 10th of July, from 1221, 1362. That's a great move. It broke its consolidation. The top of that consolidation is 1307. That's where I expect you're going to see this thing come back to. Now, thus far, it's come back with light volume, and that's exactly what you're looking for if you're a gold bull or a metal bull in general. Today, we did 298,000 contracts. That's coming into 460,000 contracts. I do expect we're going to get down there. The cool thing is that you actually want to get down there quicker. The reason being is that that's when the energy gets expended quicker. You know, you don't want to see this building cars and going sideways for a couple days and then moving. And the reason being is that if you build cars, you can have a faster move, you can have a larger move down. When you come down, you know, first day down, we come down to 1330. Yesterday, you got down to 1326. Today, we get down to 1324. Bottom line, you want to see it come into that level, and it looks like to me that we're going to have a down week in the gold market there. If we go over to the dollar, it's just the opposite. That's what this is all about. The dollar caught a bid out here today. You did 29,000 contracts. You're at 92,165, and that's saying the dollar now can go to 93,840. And that, by the way, is not even a 0.382 retracement. You know, so how we get there in the dollar is going to be important, because a regular dead cat bounce is normally a 0.382 retracement, and because this hasn't bounced since April 10th. So it's April 10th, the last time that we had a bounce. It actually bounced on March 27th. It was 98. It went up to 100.950. That's the last time you get a decent bounce. So this can bounce to 94,674. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking now right back here tomorrow morning, 9 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.